Hello guys, welcome to Traders Therapy Session. I'm your host KRO. Without wasting any time guys, welcome to external and internal range liquidity for bullish market. Then I'll have another slide or picture. This time I'm using pictures for bearish market. So without wasting any time guys, there are a few things that I want you to look at, and please, I have advised you to go into my channel. I have posted a video before this one on how to navigate this course in order for you to be at where we are, at the place where we are. So without wasting any time guys, let us start with what is happening. We are going to keep everything as easy as possible. So we are going to focus on structure. So this you will know if you have done the task that was requested from you by the previous video. So guys, as you can see, we have an uptrend, normal uptrend. You know that if you have an uptrend, you will have your highs and your lows. Then you create a higher high. After this one, then you have a higher low, higher high, higher low. You know we are buying, and when should you buy? Keep that concept in mind. I mean to say, don't tell me that we cannot sell. You can sell, but on this one, please, let's focus here. You will buy at the low. You buy at the low. So we're going to focus here. You will want to buy at the low. So take this as your 1 hour time frame. Take this as your daily time frame. Take this as your monthly, weekly. Take this as your higher time frame. Depending on what you are trading. So if you are an intraday trader, scalper like the one that we are teaching right here, this is what you are going to treat as your higher time frame. You are going to use your hourly as your higher time frame. And I am not saying do not look at your daily and your weekly, because those are important. You need to know where are you going, where will the daily candle run to. So you look at the hour for you to get that external liquidity, because we are chasing liquidity. That's what we are doing. We are going after liquidity. So as you go for low, it's a good idea to go after this liquidity if your buyers are telling you everything is telling you that you are going high, right? So these highs and lows will be the external liquidity. And let's look at this example alone. We are targeting what? We are attacking, not targeting mean to say, we are attacking the buy side liquidity. If you can check, market goes down, you're attacking a buy side liquidity, then coming down, attack the buy side liquidity. And one thing I would like to outline, if I explain something here, I'm not going to put everything on the next explanation. Like, I'm going to keep it simple, little bit complex. Be aware of that. This will be just a normal continuation price action pattern for buy. Let's look at the example number 2. It is still for bullish. I'm still explaining bullish. However you are selling here, but I'm still explaining bullish. You have your higher highs as you attack this. Look at this here. We never attempt to attack the external. This will be your external liquidity, because it's the liquidity on a higher time frame. But that doesn't mean that we don't have liquidity inside this impulse or this retracement. And for those who are new, this is how we call it. We say this is an impulse pullback, or it's an expansion retracement. So looking at this, we are taking this liquidity, buy side liquidity, but at this point we went for sell side liquidity on external swings. If you can see, this is an external range liquidity depending on your time frame. This will be your reversal pattern. As we go high, we break of structure right here. It means we are changing the character. The market is changing. You're gonna want to put your eye there and look at it, because this, whatever that is happening here, is what we are using, is what we will be teaching. The models that you'll be trading is this model, but you can just take a screenshot and then you will see as we explain the breaker right there. Then let's take this price swings. In this price swing, if this is 1 hour time frame, if I go to 1 minute, 5 minutes, 3 minutes, or 2 minutes, or maybe 5 minutes, or it cannot be like this when it comes to 15 minutes because it's huge. But if this is 1 hour and if I take a 1 minute time frame, on this price leg, on this impulse, I will see smaller higher highs and higher lows attempting to take this high. Look at this higher low. Is this higher low, the one that you see right here? Look at this higher high. Is this one right here? So I'm trying to zoom in a lower time frame. See what I see here. Then I will see this right here. Without wasting any time, guys, let's go to the bearish market and see how we identify. Oh, before I move on, we said these are external liquidity. Then this inside will be your internal liquidity. You want to look for internal liquidity, more especially for this kind of a patterns right here, the ones that you have here. Once you have this reversal pattern right here in an opposite direction, you have it here. I will show you on the next slide. You have it here. You take advantage of that. Let's go to the next slide. Everything in an opposite direction. We can clearly see, and please look at here. I didn't want to show you the entries for buy, but I will show you on the next slide because it was going to clutter though. Look at this. Look at this. The price is moving down. We are creating lower lows and lower highs. Then the price move up to take out the liquidity. It moves up to take out the liquidity. Impulse, pullback, right? So where exactly, this will come to the next video, guys. Where exactly, you need to follow here. Where exactly will the price move back? You can use certain tools that you have. If you are trading just price action patterns or trust structure, you used to use just a Fibonacci to test the retracement. But now we will look at things differently. Where they pull back, you need to see some what we call a fair value gap, of which is what I'm going to teach. A fair value gap with some sort of a structure, price action telling you something that is happening here. You look at those fair value gaps. Let's look at the market when it goes high. We were creating, I'm removing now. I have removed these things because my focus needs to be here. So we have the lower lows, lower highs, lower lows, lower highs, lower lows. We expect to create a lower high and then a lower low, but instead we do what? We create a new high. So break of structure, you have to look at such things in the market. When this is happening, especially on a time frame like this is when you get those big range days. So you need to look at such things when they happen. These ones, yes, they are okay targeting this, but when it comes here, this is when it tells you that I am ready now. And you will need to catch some of PD arrays, of which mainly it will be fair value gap with other things. Then the next video, the third video that I will produce after this one, I'll be explaining a breaker. After the next video, it will be about fair value gaps. Then the following one will be about the breakers. So I will explain breakers there. What is it that you have? Market structure or break of structure right here. I do not want to say market structure shift, by the way. After the price will come back just to take out that direction there. Look at this pattern right here. This, what you see, I don't know how to capture your attention, but I need you to leave everything that you are doing, leave everything that is disturbing you. It might be even mentally, but I want you to focus here. Look at this right now. We were expecting what? We were expecting a lower high to have a lower low. But instead, we broke this on an hourly time frame, of which is your higher time frame, right? Or a 15-minute time frame can be your higher time frame. Then, after the break, we tested this leg. We call it a displacement, and of which I will explain it when I explain the breaker. Don't focus on that term now. Look at the price right here. Whatever it is that is happening here, as the price came back down to a certain PDRA, you look at this low, look at this low, look at this lower low, and the break, the retest. This is the structure that you're going to focus on. And this, please, where are you going to find it? You need, take your attention, this kind of a structure from here, and the entry, everything here, it needs to appear where? It needs to appear here. You need to see it with a lower time frame. You need to see it here. This point from here, everything that I'm explaining here, you need to see it occurring here on a lower time frame. Then after break, and when you see the test, it will be somewhere around here. Then you take advantage of that. It's like peeling. It's like not peeling. You cannot peel broccoli, man. It's like taking the that whole portion of a broccoli, the big broccoli, whatever that the big portion of a broccoli that you are imagining. But if you take that, I don't know whether it's a branch or a side. When you take that part, it replaces. If you view it again, you zoom it again, it replaces the big broccoli. It becomes a big broccoli. Then you can take the other part from it. That becomes a big broccoli. The following broccoli, I mean to say, guys, please, this will be external range liquidity, these ones, as we take them down, but this will be internal range liquidity. If you may ask right now, before I close this video, how do they matter? How are they important? These are important because when you aim for the day, if you are on an hourly time frame, obviously on a trading, you are waiting for 2 candles. But using 15 minutes time frame, you can attack this liquidity right here. So you get your structure on a lower time frame like this, then you attack the areas like that. You will see when I explain when I show you the examples, I have like 20 full trades for December, and I will show you each and every day how do they happen. So you better prepare for that. Before you get there, please make sure that you understand everything that I'm explaining without wasting any time, guys. Please bring more people on this one so that you can help me liable, responsible for your learning. Share the video, like, subscribe, turn on that notification bell right there, and please let us engage on the comment section. Since you are not many, I'll try to look at that and try to respond on that one without wasting any time, guys. You better catch the next video, of which is fair value gaps. I'm explaining the fair value gaps on how now, if you understand as we break what is it that we are going for, this is the 2 way you can approach the market, guys, in a continuation way or in a reversal way. So now I'm going to explain the things that are happening in these areas where we are buying and what you should expect without wasting any time, guys. Let me see you. I'll catch you on the next video.